I know wealthy people, they own 16 estates on the Eastern Shore, and they live in 2 of them. Like, why do they buy them? They land banking. What does that mean? Well, the guy makes a lot of money every year, and he doesn't want to put it in a savings account, so he goes and he just buys a cool piece of property, and he buys another one. Well, okay, it sounds good, but here's the problem. The guy buys up the beautiful pieces of property, and so you can't afford it.
Right.
And if the rich guy wasn't buying up all the beautiful houses, they would cost half as much. And you could live in a beautiful house. So here's what happens. Some rich dude has 27 houses that are empty. You don't have a beautiful house. You have a family. Your kids, your dog could use the beautiful house. The rich dude doesn't even want the house. He just wants a long-term capital preservation strategy, right? And so that's a perverse incentive and a distorted economy. That's broken. That's broken money. That's because the rich dude is using an estate on the Eastern Shore of Maryland as a piggy bank.
Yep.
Huh? But the estate doesn't get renovated. The house is falling down. There's a beautiful pool on the water, and you could have a great family picnic there every Sunday, but it's not going to happen because the rich dude has 16 other houses. He just bought that house because he thought it was a good investment. Okay, that's wrong.
And there you have from Michael Saylor. We'll hear more from him, the latest from him. He'll be talking about the MicroStrategy flywheel. We have a lot going on. Before we get started, check us out at Bitcoin Bros 101. Once again, we have our ebooks, crash courses, all our social links. Join our premium Patreon pass.
Hey guys, sorry for the quick interruption, but if you're interested in trading MicroStrategy options, any other stock out there, Bitcoin, Solana, or any other crypto out there, you can now do that on MooMoo. And if you sign up with our affiliate link, which we pin in the comment section, also in the description below, when you sign up and deposit any amount, you're going to receive up to 20 free stocks, and each one of these stocks could be valued at up to $2,000. So make sure to sign up with MooMoo. Go get that free money. Now let's go ahead and get back to the video.
If you need the link right here, the Patreon's right here. And as mentioned, MooMoo, sign up today to get 15 free stocks, each valued up to $2,000. Use our link here to get the $2,000. Why don't you get free stuff? Getting straight into it, BTC versus USD coming in at 94.6K. Bitcoin keeps trucking up towards that $100,000. Now look, we have these fib extensions we want to show you from this swing low to the swing high. Look at the 1.618, the 94.507 range. And right now we're at 94.6. So will we get continued through this and potentially go back up to the 1.764, 101, or the 2 level? Right now that 1.618 is sort of that golden pocket, that technical target. So this is definitely a level to pay attention to. Not saying this is the peak, but we could find some resistance right here. Bitcoin could have a little bit of a retracement before a continuation. So that's something to pay attention to. It could blast right through it, but we just wanted to make sure you were aware of that. An update from TA Trader Allen, the Solana army, check this out. Altcoins are not going to just let Bitcoin steal the show. Right here, you see that the 10 simple moving average, it uses it as a pogo stick, a bounce and a bounce to the peak. 2021, look what happened. We started to bounce and a bounce to the peak. Sometime near 2025 or sometime within 2025, but $1,000 Solana could be around the corner. And then MicroStrategy news. Could MicroStrategy surpass NVIDIA's record of 3 years as the fastest company to ever go from $100 billion to $1 trillion market capitalization? Well, you're wondering what MicroStrategy is at. We'll look at that here in a second. But MicroStrategy, this is the calculations based on the 3x MNAV. And as you see right here, the NAV premium is right now at 3.087. So this does hold true. And when Bitcoin hits 100,000, MicroStrategy could be around 491. 110 is 539, 125, 612, and all the way down to $250,000 if Bitcoin goes this high, we'll see another $1,000 post-split MicroStrategy price. Remember, these are all post-split prices, so really, MicroStrategy, this is a $12,000 per share. If you got in pre-split, you're definitely making some massive gains, some massive gains. And look here, MicroStrategy's pre-markets almost up to 464. Are we going to see $500? Remember, in our Patreon pass, we do calls. Yesterday we made a call where the past 2 days we made 2 calls where they're 100% in profit. So you're missing out on gains. You could have used this free money here to make an entry and make some profit. So why miss out on that? But the pre-market here, we showed you this. This could be an inverse head and shoulders. This could be a massive cup and handle, or this could be just a bull flag that we're just hitting this first target. First target's around 700, 800 bucks. The second target with that macro pattern is looking up to over 2,000, almost $2,300, which would be a $23,000 post pre-split price. MicroStrategy could just be getting started. If it hits this, that's another 4 to 5x from where we are right now. So without further ado, let's hear from Michael Saylor and also Patrick Beck-Davis. Shout out to both of them and get an update from Michael's latest interview. Let's check it out.
We capitalized on Bitcoin, which is 60%, and then we levered it up with cheap convertible debt and equity raises, and we got to 120%. And that's how we ran 30x. Like, that's why we outperformed NVIDIA. Like, we're 2 or 3x NVIDIA over this time period, because we're actually capitalized. Now, coming back to the idea of growth, look, the big idea here is there's $450 trillion of money invested in bonds, invested in real estate, invested in equity by wealthy individuals, families, and institutions, and it's just for a long-term store of value. People that are wealthy just want to stay wealthy. People just want to keep their money. So they're buying these store of value assets from the 20th century, and those store of value assets, they kind of bleed 3% energy because of famine and hurricane and war and inflation and competition and obsolescence and accident and ports and unions. And fill in the blank with all the things that cause your investment not to work. That's 3% of 450 trillion. That's like 10 to 15 trillion dollars of entropy, of chaos every year. So the big idea is Bitcoin is just here. The money is just running from the 20th century to the 21st century. It's moving from physical space to cyberspace. It's moving from the finance space to the digital economy, the analog to the digital. What we're saying is sometimes the most lucrative thing you can do is do nothing. That is to say, I'll give you an example. You have $1 billion, you're in Africa, and I tell you, you can go and invest in anything in Africa. You got to hold it for 30 years. I'll give you 1,000 guys to analyze everything. Or you can buy $1 billion of Bitcoin. And you're like, well, $1 billion of Bitcoin is doing nothing. I'm like, yeah, you're keeping the $1 billion forever and you're doing nothing. The $1 billion invested in Africa is I'm taking Egyptian risk. I'm taking Zambia, Central Africa risk. I'm taking Nigeria risk. I'm taking risk on that ranch. So most of the time people have to take risks and then they got to worry about it. Bitcoin is risk stripped away from the capital and inflation stripped away from the capital. So when I evaluate any investment, my view is, okay, well, is it going to give me a risk-free 29% ARR? By the way, coming back to that, it's like 60% ARR collapsing down to like 20% over 21 years, and the average works out to 29%. And the assumption is the dollar supply keeps growing at 7, 8, 9%. And then you get an additional gain because we invent robots and AI and flying cars. And so the actual S&P index is growing because the U.S. prints more dollars, but it's also growing because we invent obscenely cool, useful things like the iPhone or like an electric car. So the future is good, but at the end of the day, Bitcoin's future is just pure digital capital. And I look at it as, why don't I just keep buying something going up 29%? All I got to do is borrow the money or raise the money at a cost of capital less than 29% over 21 years. And You know, and it makes sense for us because we're a pure play, right? People want us to do that. I mean, the people that are short, they want us to be pure play. What I'm saying is if you have a chance to buy Manhattan for 60 guilders in 1626, you should buy it. But what I would say, which is deeper, is you could buy Manhattan real estate every decade for 300 years and always pay more than the previous guy paid, and it would still be a good idea. And that's because it's the greatest city in North America. Yeah. Everybody wants to do business there. There's a limited amount of land. It's a perfect rock, limited amount of land. So there's never a bad time to buy Manhattan.
But even if you look at this though, Louisiana, we bought it for 15 million, APR 6.3, payoff 12 trillion. California 1848 for 18 million, 7.78 trillion. Alaska for 7.2 million in 1867. It's a trillion, 7.8. You're saying Bitcoin's going to be 240 trillion in 21 years.
Yeah.
Yeah. Just very easily, the way you say it, it's not a big deal to you.
I mean, look, the takeaway from that slide is the key to getting rich is by scarce, desirable property. Pay for it with fiat. I mean, how much is a guilder worth today? Like, pay for it with money you printed. Borrow the money, but we borrowed the money to pay for Alaska. I mean, the country was broke in 1867. We just fought the Civil War, but what did we do? This guy Seward had the vision to print a $7.2 million check, pay off the Russians. And so number one thing, buy the property. Number two thing, hold it for a long time, right? I mean, because it might not feel like much, but when you're compounding over 100 years or 200 years, and so what do all those four have in common? Well, they're all something you would want to hold for more than 100 years.